Okay, quick sound check. Excuse me. Okay, welcome back everyone. Huge week for the FX market. Just waiting. Okay, audio seems to be good. We can get started. Just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general advice, as the information or advice given does not take into account your particular objectives, financial situation, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products, thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay, so we have a huge week this week, especially in the euro. Just for comparison's sake, if you guys want to know what's going on with the euro, I put out a note earlier just to let you know the euro was first released or first used in 1999, but the notes itself doesn't even exist until January 2002, and that would be 20 years ago. And past December 2002, that's where euro surpassed the US dollar. It's no longer in parity. We actually haven't seen the euro this low in pretty much 20 years. Okay, so huge news in the market. I think the euro actually reached parity this morning, actually yesterday. But for those that wants to know what's going on, the euro USD is pretty much at parity with the US dollar. Okay, good morning, good afternoon, good evening, wherever you're from. We've got a big fundamental data coming out. That would be the CPI numbers from the US, expected to come in, the year-on-year inflation to come in at 8.8%. Previous number was 8.6%. This is going to create a huge volatile movement in the market. I think that's pretty much guaranteed at this point in time. Okay, so by the way, if you guys have any questions or anything for me to look at before that news comes out, do let me know and we'll go through it as soon as we can. So if you got any positions, you want to double check your stop losses or your potential targets or whatever not, or you want to discuss about it, do type it in before that news get released. That will be in 28 minutes. Okay, so there's a request for euro. Let me just check that. Got a euro short. I have a euro long, by the way. If you guys want to know what my position is, I'm showing it there. I've got a euro long from last night. Fortunately, kind of stuck here. I'll explain why I went long. But for those that went short, just be mindful on this one. The hourly fib that should still be valid is actually this one. That would be from the 8th of July to the 12th of July. This is the valid hourly fib if you're going through that. So you technically should have a long position if you're going by this fib. If you have a new hourly fib, which is this short one here, it's done. We bounced off 78.6%, so this is pretty much done. So if you do have a short position, you have your stop losses adjusted before the news. You should have your stop loss. That's definitely a point there. You definitely want to have a stop loss. I don't know if the spread's going to widen, so please factor that into account. If you're trading, if you have a position here, your stop loss and whatever not, just spare some pips for the spreads, just in case it widens during news releases. Okay, but technically from the hourly perspective on the Euro USD, this is actually within the Ichimoku cloud. Probability is actually still pointing to the upside. If you do have a short position, where's your stop loss going to be? Just make sure it's not exceeding 1.01. Okay, just keep an eye out on this one. So how much are you risking? What's your target level? I'm not saying that the euro won't go below parity. It's just that I'm taking advantage of the bounce from parity. Parity is something that I've experienced before, about 10 years ago, with the Australian dollar. Chances are it'll actually surpass parity. Euro could potentially slide down below parity. But right now, there's actually a lot of buy orders at $1. Okay, I think if you go by the outlook this week, I pointed out there's a potential for the Euro USD to reach parity. I just didn't expect that to happen before the inflation numbers from the US come up. So I guess market is trying to price in that inflation number. So inflation again is expected to come in at 8.8% year on year. If it does come in below 8.6%, that's going to be bad for the US dollar. It's actually going to be beneficial for the euro. So there's always that risk. We might plateau. We might hit that 8.8, or we might get stuck at 8.6. Even if it posted 8.7%, which is a gain of 0.1%, it's still below market expectation for 8.8%. So I don't think euro is not the only one. I've checked through most of the hourly charts. Most of them are actually within the Ichimoku cloud. So there's actually a lot weighing on these CPI numbers. There's recession concern. That's basically what's pushing the euro lower. We've got the prolonged gas issue from Germany with Russia. If Russia kind of stop the gas, then euro, you could go even lower. Germany could go into a much deeper recession. So there's a real concern for recession in the eurozone right now, and that's basically what's pushing the euro down, apart from the stronger US dollar, obviously. Okay. So we take a look at the Euro USD. Right now, I do have a long position, and I just explained to you why I do have a long position. I'm taking advantage of the taking advantage of the parity level. My stop losses, if you guys want to know it, is actually at 0.9975, just 25 pips below parity. This is the closest that I want to get for Euro USD. In terms of target level, I'm kind of expecting a potential retest of 1.0150. So that's basically where my target level is. Again, if this one exceeds 1.01 on the hourly time frame, then we do have enough momentum for this one to retest 1.0150. But again, the CPI number is huge. Let me just remind you again why I'm really concerned about that. It might impact your trade massively. So if you don't have a running position, I would say, wait for the CPI number to come out. Then we'll look at the aftermath and see if there's any position that we can take for the day. But that's the only big numbers coming out tonight. We've got I believe the Canadian numbers out. Sorry, I'm on next week, July 18th. Sorry, let me just switch calendar. Okay, we've got the RBNZ hiking up 50 basis points, by the way, for those that wants to know. Canadian is Canadian today. It should be today. Yeah, Bank of Canada interest rate decision coming out in 2.5 hours time. No, yeah, about 2 hours time. Okay, so not time for Canada yet. Okay, so yeah, that's my thought on the Euro USD. If you guys want to know my side on the Euro USD, I'm telling you right now, I'm actually long Euro USD. I might get whipped by the CPI numbers, but I've got my position since last night. I don't have a new position today. I don't think there's any sustainable position to take because the Ichimoku cloud is actually inside the Ichimoku cloud, and when it happens, I just don't take positions when it happened on the hourly time frame. Okay, so let's review the rest. Let's take a look at the Euro Yen. Euro Yen, we do have enough momentum to bounce out. Right now we are focusing on 137 and 137.50. If you go by the way, how are you guys with using pivot? If you go by pivot on the euro yen on the hourly time frame, this is above resistance 1. There's actually room for this one to go back up to resistance 2. I believe this was outlined as well on the outlook. Did I mention this on the outlook, or is it from last week? But we're looking at 138.50 on euro yen. So expectation for the euro yen is actually to push higher towards 138.50. If you go by FIBs, you have your options. This would be your FIBs. Okay. 138.50 is actually not even 161.8%. So I'm gunning for 138.50 on the euro yen. If you have a running position on the euro yen, that should be your target, around 138.50. Or if you want to go closer, 138.25. That's completely fine. But if you have to take a new position right now, be mindful that if you go long, your stop loss will need to be below 137.25 or around 137. So calculating the risk, it's kind of huge, right? Because your stop needs to be way down there. You need to be risking about 85 pips. You know, it's up to you guys. I mean, if you do have a running position, that should be okay. Your stop loss cannot be adjusted as of yet. It still needs to be at 137.25. We might be able to adjust it post CPI numbers. But at this point in time, if you plan to go long, your risk reward ratio is not that great. You're risking twice for that 50 pips potential gain on the euro yen. Okay. So yeah, euro yen, just be a little bit mindful with euro yen. This is barely around the Ichimoku cloud. If it doesn't go past that Ichimoku cloud, then I actually don't have a lot of confidence with the momentum behind this. But if this one closes above 138.10, 138.10, yeah, around 138.10. If it does closes above 138.10, then it should have enough momentum to actually push beyond 138.50. Might push up to 139 as well. But just be mindful. If you do want to go long, you are likely going to have to wait for a break above 138.10, which is above the Ichimoku cloud. Risk reward ratio makes a little bit more sense here. You're probably risking about 90 pips or about 90 pips gain. So I think this one still makes sense. If you don't have a position yet on euro yen, just watch out if the hourly time frame closes above 138.10. If it does on this hour, then it should be fine. But right now, if you're taking a look on the euro yen as it is, it's actually within the Ichimoku cloud. We don't have any confirmation that this is pushing above the Ichimoku cloud yet on the euro yen. Okay, so be a little bit mindful with euro yen. Okay, let's go. We've got requests coming in. Okay, let's go through Swiss yen first. So you're planning for a long on swing on the daily. Okay, let's go. Swiss yen swing daily, I'm okay with it as long as your stop loss is below here. I believe this one bounces off 38.2. Yeah, no, 50% even. Okay, that's great. So this would be your FIB. If it does closes the day like this above 140, ideally above 140, then you can go for that swing. There's a potential for a hidden bullish divergence on the daily for Swiss yen. The yen is likely going to get weaker this week. There was a statement from Treasury Yellen, Janet Yellen, U.S. Treasury Secretary. Yeah. That intervention from Bank of Japan is probably unlikely. So that's basically what's driving the yen lower. And apart from that, we've got the dollar yen strength as well. So for Swiss yen on the swing, I like the idea. I really like the idea right now for this one. Just be mindful. You might want to give it a little bit more room just in case if you're taking a daily position. The momentum is not quite done yet, so you definitely need to watch out for 138. Okay. It wouldn't be today. It will be this week though. If it loses steam, it might go back down to 138. If Swiss yen does goes up on the daily, I think from the perspective for euro yen and sterling yen and Aussie yen on whatever yen, should be going through the same direction. I think we're probably going to see that weaker yen. So I like this idea a lot. So if you're planning for this one, I like this one. Just make sure your stop loss, ideally I want to have it below 138 just to give it a little bit more room. Again, for daily, your target wouldn't be like in 141 region. Your target will be around 144, 145. So that's an okay risk to reward ratio. Even if you put your stop loss at 138 or 137.75, you are still targeting a lot. Even if you go by 127.2, you're still aiming for, wow, 475 pips for a 300 pips risk. It still makes a lot of sense. But again, this is not for everyone. This is a swing trade. So yeah, the numbers are going to be huge. It's not going to go as quickly as you want it to be. All right, sterling yen on the daily. Let me clear off this fib. That was from last week, by the way. So last week with the pound USD, the one that I have, it got stopped out at entry, but everything else was okay. Sterling yen hit target and stuff. Okay, sterling yen on the daily or for the day? I'm assuming for the day, yeah. Okay. What's my pivots? Okay. So sterling yen for the day, we might have enough room to continue to push higher. We're probably looking at around 164, 164.50. But again, this is more or less the same situation as the euro yen, I believe, that we talked about. Let me just go a little bit thicker. Okay, so definitely want to pay closer attention to 164. This is going to be your limit. This is going to be your immediate resistance for sterling yen. Hourly does point for further momentum to the upside. We just break above resistance 1. It actually closes above resistance 1 on the pivot. We are trading above the pivot point. We are going to be looking at support coming in at 163. That should give it enough room for this one. So if you're planning to go long, you could be aiming for 164, 164.50, but whatever it is, your risk is still going to be quite huge because you are going to be looking at stop loss below 163, potentially around 162.75. In terms of target level, you could be aiming for 164, or you just go straight for resistance 2 at around 164.40. If you go by psychological price level, it will be at around 164.50. Risk reward ratio does make sense. I think from this perspective, you're looking at about 100 pips gain for maybe about 50, 60 pips of stop loss. That's for selling yen though. Just be mindful of the CPI numbers coming out in 22 minutes. If there's no CPI numbers, I would probably go, yeah, I like this trade and stuff like that. It's just that we have that CPI numbers coming out in 20 minutes time. No, actually, not even. It's in 12 minutes actually. Okay, so for selling yen, if you do have a running position, you still want to have your stop losses around 162.85, 162.75. I prefer 75. But again, it's up to your preference. I just like to give it a little bit more room. Any fundamental side from Japan, from Japanese yen? Nothing much except for that comments from Janet Yellen about how the Bank of Japan is probably not going to intervene. Other than that, still good. There's no changes from Bank of Japan as of yet. So yeah. Trade with cloud and stochastics 14.55 in 5 minutes. Entry based on stochastics. Exit using 1-to-1 risk reward ratio. What do you think? Using cloud and stochastics in 5 minutes. I'm actually okay. There's actually a strategy based on that. It's actually a bit different. You actually need to look at the direction for the trend on the hourly, and then you only take the trade on the 5 minutes in that direction and only in that direction. If we do have time, we'll talk about it later on. Okay, Aussie USD, can it reach 70.70? Aussie USD 70.70. Pretty far. We are looking at the daily. I don't think there's any changes. By the way, there's nothing in here. There's no patterns or whatever not. It's just a parallel channel there. So we still need to have a break above 68.50 on the daily for this one to continue higher. If you're aiming for 70.70, we need more evidence that this one can bounce off that. In terms of support for the Aussie USD, unlike the Euro USD where we can rely on the parity, there's actually not much here. We actually have 67 and that's pretty much it. It's not something we would say major. It would fall into the average though, because the average for the Aussie USD is around 65 to 68 cents. But yeah, this is what you're looking at from the daily for this one to go for that 70.70. Huge odds. At this point in time, we need a daily confirmation above 68.50. Otherwise, it's still going to be really risky, because if you take a look at the Aussie USD on the daily using the weekly, sorry, let me adjust this. There we go, much better. Okay, so if you take a look at this one here, just on the weekly pivot, where is 70.70? 70.70, it's beyond resistance 3. So this is to me a huge ask. If you are trading intraday, I don't expect this one to go back up to 70.70 like that. Not even from a swing perspective. I don't think it's quite time yet. There's no indication as of yet. We got pushed down through support 2. We're still trading below pivot level. Take a look at the Tenkan Sen. That's basically going to cap the market today. And in terms of Kijun Sen, it's way up at R2. So this week, I think there's a lot of resistance. I'm probably not going to be eyeing for 70.70. I'm probably more worried about 68.50, 69. You know, you don't look too far ahead. There's a lot of resistance before we even get to 70.50. Okay. Take a look at the dollar yen daily. Stochastics keep moving down, but price keeps making a new high. All right, let's take a look at sterling yen. No, dollar yen. Stochastics on the daily pushing down, but price continues to create a new high. Now, I've considered this, but if you take a look at this one here, we are actually bypassing. Technically, if you take a look at the dollar yen, it's slowing down, right? It's technically slowing down. It's actually forming a rising wedge. Now, when it's forming a rising wedge, if you take a look at the divergence that's being formed there, you probably think of that as a class A bearish divergence. Now, if that's a class A bearish divergence, why does this one keep pointing higher? The thing here is that if you take a look at the movement to the upside, it's actually slowing down. The range is actually getting smaller. Now, there are, if you take a look at the pivots, we talked about the pivot level last week. Look at how the range actually shrunk, right? We are actually in more of a consolidation phase rather than in a trending phase, even though this one keeps crawling up. Momentum still points to the upside. No, sorry, the momentum in general still points to the upside. We're still in an uptrend, but if you take a look at the range is actually getting smaller, a lot smaller. We are looking at 75 pips today and then 138 pips yesterday for range. So, sorry, last week. The range is actually getting smaller. From a daily perspective, I don't see anything weird about this. I don't pick up, a strong class A bearish divergence. Take a look at the stochastics. It's going down, but it's going down really slowly. So for this one to form a divergence, it's actually hard to identify this because it doesn't actually form a full cycle. It's actually forming that cycle while above the 80 level. So I would I would prefer to ignore that as potential class A divergence on the dollar yen. If you take a look at it on the hourly time frame, do we have time? We got 6 minutes. Okay, taking a look at the hourly time frame, it's slowing down. You know, it's if you go by the daily, sure, the momentum does point to the upside, whatever not. But if you go on to the hourly time frame, price does create a new lower high every swing it takes. So what it's telling me is it's basically in a consolidation phase. This is consolidating with the strength of the US dollar right now and the Japanese yen likely to get weaker. I believe we touched 130. No, we haven't touched 138, but that would be the next potential target for the dollar yen. And I think if CPI posted 8.9 or even 9, I'm just saying if it does point that way, then I think we could see 138 by tomorrow morning on the dollar yen. It's inside the Ishimoku cloud, so be mindful on this one. It's trading above the pivot. So if you do want to go long on the dollar yen, I'm quite okay with that in terms of stop losses and whatever not. It's just that it's inside the Ishimoku cloud. So if you do go long, you got a couple of support level. This one is too close. I really want to give it a little bit more room. If you go by about 50 pips, I think that makes a lot more sense because you are going to be looking at around 138 as a potential target. So risk reward ratio is about 1.5. I think it's still okay. You're risking about 55 pips for about 88 pips. If you do go long now, ideally I want to see an hourly close above 137 in all honesty. Sorry, 137.25. No. Yeah, about 137.25. Risk reward ratio is still great. I would be a little bit more patient and just wait until this one goes above the Ishimoku cloud. If it does goes above the Ishimoku cloud, then it's completely okay because this one corrected itself to the Ishimoku cloud and it could bounce off, and that's completely fine with this one. Momentum could just cross up, trade above the 80 level on this momentum, and price could still rally up. So just be mindful on the dollar yen if you plan to go short. I don't like how this is forming in terms of the daily momentum. It's actually really dragging on right now, even though it's forming a rising wedge, and we know a rising wedge typically are bearish reversals. This one could still go for that 138, and that rising wedge would still be valid on the daily time frame. Okay, what's my trading strategy? I have a couple of trading strategy, but mainly I use my Ichimoku and my FIPS. Does that make sense? Entry with stochastics? No, it doesn't make sense going with a 5 minutes entry on stochastics. I believe that was your question. There's just too much noise on the 5 minutes, and the stochastics doesn't even represent price. It just represents that short-term momentum. Pound USD, I'm going short 1.11, 1.11974. Shouldn't be a problem with Pound USD. It's just that it's inside the Ichimoku cloud. That's all. 1.1974. That was from a couple of days ago. Yeah, I believe. Okay, we got news coming out in 2 minutes. I'm trying my best to track something here. What do we want to use to track it? The Euro USD. It should give enough indication. Finally, I can see live again after several weeks of conflicting schedule. Good to have you back. Okay, just waiting for that data to come in. Okay, so let's take a look at the Pound USD. If you are short Pound USD at this point in time, just make sure your stop losses are good. I think if you have your entry at 1.1974, yeah, 1.1978. So about resistance to your stop loss will be above 1.2. You're good. You can leave this one here. I don't think it's time to move your stop loss so close to the news. We are only like 1 minute away from it. Okay, we are focusing on the headline inflation, which is the year-on-year. Okay, we're not looking for the month-on-month gain. We're definitely looking at the year-on-year gain. Okay, spiking. Any minute. Month on month 1.3%. It's US inflation rate at 9.1%. Wow. So the dollar yen should be running up right now. Just double checking on the dollar yen. Yep. So yen is probably going to go for 138. Now let me just explain to you what the number means. It's 9.1%. The expectation was 8.8%. Last month was 8.6%. Inflation is really high. It jumped up a lot. This one jumped up by half a cent. So the US this week is probably going to get stronger and stronger. Now with the Euro USD, I'm just waiting for this one to hit my stop loss. And I'm not getting out of the position because I already have my stop loss. I'm not too concerned. I'm just waiting for parity to see what happens there around parity. If it bounces off again around parity, then we might have something. But if this one breaks if this one breaks 99.75, we're probably gonna lose a lot of positions on the Euro USD. We could see a lot of a big slide to come in. Okay. So dollar yen on track towards 138. I don't have a problem with that one. Euro USD, we got parity. Pound USD should be butchered right now. Yeah. Okay. So pound USD, if you have that position just now at 1.1978, I think it's time for you to move your stop loss to 1.1950 and lock in something. You definitely want to lock in some profits here. You could get out right now. You already have 100 pips. So I would say lock something in. 1.1950 should be a good enough distance. This is the first 2 minutes. You might want to wait for about 3 minutes before you will start locking in profits. But if this one breaks below the Ichimoku cloud, then we're probably going to be looking at a slide there. Momentum on the hourly time frame for the pound USD still points to the downside. Euro USD, we're keeping an eye out on parity level. Momentum still not crossing down yet. Probably okay in 5 minutes time. Just hang on tight. You might get a better price in 5 minutes. Okay, so again, CPI numbers super high. I don't think the market is expecting 9.1%. Let's take a look at others while we wait. I'm just waiting for this one to hit. Okay, Aussie USD. We talked about this just now. So I think there's room for this one to go to 67. The hourly does point to the downside. I think this one closes like this. We're breaking support trend line as well. So Aussie USD, I think this one still points to the downside. If you do have a long position aiming for 70.70, I think you need to be really careful with this one. Aussie USD has further room to go to the downside. In fact, I think this could be a good trade. If the hourly closes like this, I think we are gearing up towards 67, potentially even lower. Might even have room towards 66.75, 66.50, but just let me double check. We need to go by the 4 hourly time frame to get your target level on the Aussie USD short position above beyond 61.8%. Stop loss would still need to be up there. Target level would be going for 161.8%, which is around 66.50 on the Aussie USD. So risk reward ratio is still okay. So keep an eye out on this one. I much prefer to wait for this one to close below the Ichimoku cloud. If it does close below the Ichimoku cloud, I would prefer to go short Aussie USD. Let's take a look at Euro Yen. Anything new on the Euro Yen? Nothing. Aussie Yen should be okay. I'm sorry, I'm just reading through what's going on in the market here. Getting rid of lines I don't need. This fib, I don't think we need this fib. This one we don't need it. We got pivot at 92, that's fine. 94, that's fine. 91 and 990, that's completely fine. Dailies within the Ichimoku cloud on the early time frame. It's above the Ichimoku cloud technically, so I don't know how deep is this correction here. We're probably looking at support between 92 to 92.50. That would be your immediate support level for the Aussie yen. I'm not too concerned about the yen itself. I think we see this spike coming out from the Aussie yen and the Euro yen. It should be okay. I'm more worried about my Euro USD, but yeah, as I said, it's probably going to hit my stop loss. I just want to see if it does break below parity and how strong is that move. We just created a new low for the day. Wow. Okay. Swiss yen. I'll wait for this one. So we'll take a look at Swiss yen. Swiss yen is okay. So yen still on track. I don't see a problem with yen crosses at this point in time. It's just the main dollar strength that's really concerning right now. Euro USD is probably going to take that slack just because it's around parity. Pound USD is on track to go lower. It's already below the Ichimoku cloud. We got support 1 for the day, potentially targeting support 2. Should be in line with what we just saw on the pound USD here. For our FIPS, like the Aussie USD, targeting 161.8 or 127.2% for pound USD. So if you have that pound short, I think it's really time for you to lock in something to 1.1950 ideally, or maybe you want to go for that 100 pips. It's up to you. Take something away from it. You are short at 1.1988, 1.1980. Okay. All right, so let's go through the rest. What do we have? We've got dollar CAD, New Zealand USD. Probably not a good time for New Zealand USD, but it's below 61. I like this one. If it does closes below 61, I might be a little bit lower than 61, but yeah, I don't think there's an hourly close below 61. Yeah. Okay, if the hourly closes below 61, then it opens up room for 60.50 to 60 on the New Zealand USD, but I probably don't even want to discuss this at this point in time. When was this note? FOMC does 75. Okay, well, we passed that fib. We passed the bigger fib as well. Okay, I like this one. I like New Zealand USD. I think this is more of a breakout scenario. If it does close below 61 cents in 20 minutes time, I think this is convertible into a potential swing trade on the New Zealand USD as well as the Aussie USD. But yeah, I think Aussie USD, we mapped it out. A risk reward ratio is 1.3, risking 65 pips for about 80 pips gain on the Aussie USD, but momentum does point to the downside. Euro USD is holding strong at parity. Pound USD, I think that's sliding down. In 5 minutes, when stochastics confirm entry, Fibonacci automatically had break 23.6%, correct, and so go so far from 23.6%. I wouldn't use stochastics for entry, especially not in 5 minutes time frame. You can do that on the early time frame, but in fact, you know what? I'll show it to you right now. How do I actually use it on the hourly time frame and stuff like that? So take a look at the pound USD here. Pound USD is probably not a good example because this is this is the first candle below the Ichimoku cloud. But let's assume hiding pivots. Let's assume that you are using Ichimoku cloud as your potential entry on a 5-minute time frame. This one is below the Ichimoku cloud. So on the 5-minute time frame, if you are trading this, like this one, you should be going short right now. Okay, because you are taking trades that created a swing above the Ichimoku cloud and then come back down below the Ichimoku cloud. So you actually should be short right now on the pound USD on the 5-minute time frame. If you're going by the Ichimoku cloud, and if you're going by stochastics, you know, you wouldn't go in short on the stochastics because you're waiting on the Ichimoku cloud to close below the Ichimoku cloud as well. Okay, so right now, you should be short. You should have a short position if you're going by that strategy. In terms of target, just let it loose. In terms of stop loss, I don't quite care in terms of stop loss because whatever you're doing right now, you're just going for the entry. Okay, if this one comes back up, for example, and it closes like that again, then you want to go short again in the same direction, maybe over there. Okay, in terms of target, that's adjustable to your hourly view. So in terms of my hourly time frame, my stop loss is up there, right? So I would have my stop loss a little bit higher. Oops. Okay, can't do it. But my stop loss would be here. In terms of my target, it will be down here. So if you got a couple of positions, that's basically your trade. You're going, you might have potentially 2 running position aiming for 40 pips, 40 pips. That's pretty much it. If you go by 1 hour and a 5-minute time frame, that's what I would consider to be okay from using Ichimoku cloud as your entry. But entry using stochastics just doesn't make sense to me, at least not on the 5-minute time frame. Okay. Okay, you got an assumption. We're gonna trade here to buy the cat. Take profit at 1.3170. 1.3170 is a bit too far. 1.31 should be okay. If you go by 1.3170, you're probably looking at this fib here. I'm just guessing, but it should be. No, not even. Okay, 1.3170. Which fib you're going by? That's the thing. Because I only have this range here, and I don't have 1.3170. So we might actually get stuck at around 1.31, slightly above resistance 2 on the daily for the dollar CAD. So if you want to go long dollar Canadian right now, your stop loss would be below that. That would be your stop loss. In terms of your target level, that would be your target level if you go for 13170. Unless I'm missing something, what is at 13170? Unless I'm missing something. I'll check on the daily. 13170 from this fib, maybe. That's not 13170, that's 132, 13150. I just don't see 13170. Nope. I don't see 13170, but you can go for 131, 13150. But it just doesn't make sense, right? I mean, your stop loss is going to be so wide. It just doesn't click. You're risking 80 pips for a 40 pips gain. I don't trade dollar Canadian, but I don't like the dollar Canadian like that. Let's double check. Euro USD is still holding on strong. Wow. Okay. Oil. I do want to talk about oil a little bit. We were talking about oil, I think about last week or 2 weeks ago. I'm expecting for this one to drop back down towards 97-ish, right around there. the issue with the recession and stuff like that, it's actually really bad for oil. A lot of talk about, yeah, oil's going to break lower. It is below 100, but again, from last week and stuff like that, we did talk about the 100 level. Actually aiming for this one to correct itself lower. So for those waiting for oil positions, is it time for you to go in long term for oil? I would wait until it goes to about 96, 97. If it does bounces off 96, 97, it doesn't close below 95 on the daily for UK oil, then I'm quite okay. US oil is a little bit deeper, but as long as it doesn't go below 92, I'm actually going to be okay with this one. So for US oil, 92 is what you want to be focusing on. Just make sure there's no daily close below 92 or price doesn't even go 92. If price drops to 92 or even closes below 92, then you need to reconsider everything for oil. I don't think it's time to go in long yet. I think there's further analysis that needs to be done for oil. This is just the assumption that if this one corrects itself lower below 100, that's I'm completely okay with that. UK oil is holding on strong. I'm looking at around 96, 97 for a potential bounce. If it does bounces off that and never get to 95, then that's probably the cue to go in for long-term long on oil. Let's take a look at the futures market. How is it reacting? So futures going low. I think we could potentially go lower on futures. For this one to go up higher, I don't think that's going to be possible at this point in time. We've got this. You still need to have your stop losses way up there for a couple of good reasons. We've got this resistance trend line that you need to keep an eye out for. Above the Ichimoku cloud, so stop loss above the Ichimoku cloud or whatever, around 31.25. That 31,250. That would be okay. If we adjust this onto the daily, I think there's a lot of room for this one to go. We are likely going to break lower than 30,005. We're probably going to be looking at a potential return towards 30,000 on the US 30. So keep an eye out on the US 30 as well. Momentum does point to the downside for the daily. And we do have enough momentum for this one to track lower. In terms of range, it still makes sense for this one to track lower towards 30,000 as potential support for the US 30. I'm just curious, Euro USD. Yep, should be fine. Albert, if you have that short position on the Euro USD and you're holding that short position, if you still have it, please keep an eye out for any bounces off the parity level at $1. Oh my god! You know what? For Nasdaq, this is gonna be really, really tough to identify stuff here. The drop is just too quick. Are we going to be looking at a potential bounce in futures? It's going to be tough. We just had a headline inflation that jumped up 5.5%, 0.5% from last month. This is huge. This is really, really huge. In terms of FIPS, I think this is the only FIP that we have right now. In terms of target, we are above 78 points, below 78.6. The next potential target is around 127.2%. That would highlight the previous low as well on the Nasdaq. So if you're planning a short on Nasdaq, you could potentially get away with a smaller stop loss soon, but initially this will be your stop loss and your target level. It won't be 1-to-1. But I mean, if market does this, bounces off that 61.8% and then it goes down, then your stop loss can be adjusted there, and this would be a good trade. So the option is either you rush in right now or wait for the hourly time frame to close and give you some confirmation, or at least wait until the US market kicks off. That would be your cue on the equity market. Yeah, we just take a look at XTI USD. which is this XAI USD, yeah, WTI. If you do have a long position, XAI USD, I got long at 101. What are you still doing here at 101? What's your stop loss? You got dragged down a lot. In terms of daily confirmation, I don't think we have enough confirmation for this for a potential bounce. We're still looking at potential return towards 92, and that was still probable. If you have your entry at 101, just make sure you have a stop loss. I think the ideal stop loss would be around 93. If you don't have a stop loss, I think you're gonna be in for a lot of pain. So make sure you have a stop loss, please. I mean, your entry is at 101. Again, let me just remind you, oil, it's not for, I'm not short-term trading or intraday trading oil. I'm more of a position holder for oil. Some of you guys know my trade from last year. It took, what, 6 months, 3 months to develop. It run for 6 months, yeah. But basically, if you do have your entry at 101, what is your target? What's your intended target? What's your stop loss? That's the thing. You're risking, price is already down 7%. No, $7, yeah. Price is already down 5.6. It was spiked down to 7.6%. Sorry, $7.6. That's a lot of risk involved. What's your target level? How long are you planning to trade this? How long was your intended trade? Was it an intraday trade that got dragged on, and if so, why was it dragged on? Any information that you can fill or give to me, that would help out a lot. We are expecting the Central Bank want to increase the interest rate to tame inflation and counter the dollar. What we expect from ECB. Yeah, I was just going to talk about that. ECB's meeting is next week. They are probably going to hike 25 basis points. It's not going to do a lot of damage because right now that information has been around for about a month plus, right? I think that time we had that the bond market that spiked up, the Italian bond market that spiked up about, what, 3-4 weeks ago that we talked about it. There was talk about ECB hiking interest rate and stuff, but look at where the euro is right now. It's at parity. That meeting is going to be next week. We're not looking for that interest rate hike. We are looking for the forward guidance given by the ECB. I think that's basically what's key. Now, the problem with that for a lot of traders is that this is not going to be quantitative, it's going to be qualitative, because we need to identify what is the forward guidance that they're going to give. Okay, yeah, I'm still safe, which is good. Now US and UK have the same inflation number. The UK inflation number is not out yet. The UK inflation number, it's, I believe it's next week, yeah. So US and UK have the same inflation number. We've got new numbers coming out from the UK, which is next week, I believe. Let me just double check. Okay, inflation number for next week, we have the forecast stable at 9.1%. Yes, UK and UK are at the same level, 9.1%. But again, between UK and the US, the difference is so big, right? The US economy is so big. It's a super economy, right? The whole world is watching. Not everyone's watching what's going on in the UK. In terms of interest rate hikes in the UK, I think they're playing catch up with the US. I think FOMC is a little bit more clear, and FOMC is really clear in terms of inflation number. If it does goes up, then they're still going to deploy 50-75 basis points. We're probably going to be looking at adjustments to the threshold limit for this year from the US. Last time it was 3.6%. That was up from 3.5%. We might see this one adjusted to 3.75% or to 4% for 2022. Okay. All right. Let's wrap things up with 5 minutes to go. Any last minute stuff that we want to talk about, or we want to take a look into any potential trades that we are eyeing for. Pound USD, I'm waiting for this one to break below the Ichimoku cloud. If this one doesn't break below the Ichimoku cloud, I don't care how good the spike is. I'm not going to be trading the Pound USD because this one would still fall into within the Ichimoku cloud. So Pound USD, ideally we want to see that break lower. Okay, for that pound short, someone that had that pound short. Thomas? No, that's dollar Swiss. Oh, I skipped dollar Swiss. That's a question on dollar Swiss. So let's take a look at dollar Swiss. No, let's take a look at. Let me talk about pound USD because I think this is a waste if you don't adjust it. Someone was short pound USD. Adam Solomon was short pound USD at 1.1978. I think you should lock in some profit or adjust your stop loss to lock in some profit, or maybe scale out your position. Otherwise, it's gonna be a waste because I think you are green by 100 pips right now. Okay, dollar Swiss. I skipped dollar Swiss. I'm very sorry, Thomas. Let me just clear dollar Swiss at 0.976, stop loss in 0.985. You want to go short dollar Swiss. Probably not a great idea with the CPI number from the US just now. I think we are potentially looking for a little bit of a bounce here on the dollar Swiss. Do you want to go short 97.60? Your stop loss is at 98.50. Okay. 97.60, stop loss 98.50. You want to be targeting 96.7. Sorry, let me just check what's here, because if we go by this fib, what is at 96.7? 50%. I don't think this is ideal. Let me show you the daily time frame. I don't like this short trade. Take a look at the daily time frame. We are on this fib right now. We are testing 61.8%. So if the daily closes above 98.50, which is where your stop loss is, and it's probably is going to hit that with the CPI number so high, right? Market is expecting 8.8%. We got 9.1%. This is just going to track higher for the dollar Swiss. There we go. Okay. We could potentially go back up to pivot, and we actually push beyond resistance 1. So there's potential for this one to get to push higher towards resistance 1 and then potentially resistance 2. The momentum is crossing to the upside right now. We are very close to, we're back above support 1. So if that's the case, take a look at this one. Just make sure your stop losses are there, which is below support 2. You could be targeting pivot. You could be targeting resistance 1. I don't want to be caught short the dollar right now. I think with such a high inflation number, I really don't want to get. I really don't want to be short the dollar. So yeah, just think about it for the dollar Swiss. I don't trade dollar CAD and dollar Swiss, so I'm not really good at this. But I'm sticking by my Euro USD, which is here. There we go. I'm not going to close out early because I've got my position, my stop loss at 97.75. It doesn't hit. I didn't get any notification, so I'm still good. Okay, but I'm still long the euro dollar. I could be wrong, but the reason why I'm long the euro dollar is because the parity. I'm keeping an eye on parity. I think parity level it's going to be strong. Plus, if it does go below parity, my stop loss is only just 25 pips below parity, so I'm actually still liking the Euro USD trade. If you do want to go in long, going by my view on the Euro USD, you're actually getting a discount. But again, it's really up to you, because you're getting about 25% discount here, risking 50 pips. Okay, mine is 77 versus 48, so it's up to you. I think it's a good choice. Albert, did you get out from the Euro USD, or are you still short Euro USD? Just curious. One last question. What's my percentage for strategy or method? You mean my accuracy? My risk reward ratio is it's normally 2-to-1, right? So I don't need to be that accurate. I only need to be about 40 to 50% accurate, and I'm actually pretty happy. But my current strategy would fall between around 60% to 65%. But as I said, it wasn't designed to be like that. I'm designing it to be just accurate 40% of the time. Okay. So you got your positions. Keep an eye out on this one. Let me just double check the pound USD before we go, because I'm curious. I think we are good. We are below 1.1850, below the Ichimoku cloud. So yeah, I think this one's okay. Euro USD, I still prefer long. Unfortunately, I'm just taking my chances right now, because I already have a stop loss adjusted at 0.9975. You got out right a minute before we start the session. Oh, okay. I thought you were still running that. You should pick it up at parity, but you got out. That's completely fine as long as you get out, because that whipsaw, I don't know where it's gonna go, right? I mean, if we get a CPI number that's lower than 8.6%, that's gonna be really bad for that trade. If you go along with EU, no, I'm not going along with pound USD. I think pound USD is a little bit too late for me. I don't like how big that whipsaw is. I didn't go long pound USD because it was stuck within the Ichimoku cloud. For the Euro USD, I went long yesterday. So I actually went long before it actually went inside the Ichimoku cloud. So I'm actually looking at the parity level as a potential strong support. So I'm basing that more on psychology right now rather than anything else. It's by logic, I wouldn't take this trade. I'm only taking this trade because it's at parity, and that's something that's something that we need to consider as well. But I mean, if you know my trading strategy, right? I don't counter trend. I wouldn't be going long the Euro USD if it's not at parity. So yeah, maybe it's some kind of an excuse that I take this trade. Because I saw this happen before with the Aussie USD. When it attempts to break parity, it does eventually breaks, but it's not an easy task. It's not like one day it breaks and then it's gone. It actually stays there for about a week before it actually loses that parity level and then goes higher for the Aussie USD. Okay, so yeah, good luck with the trades. We do have a session on Friday. I think there was a question asked. We do have a session on Friday. It's more about your financial health, your financial goal. It's not really fully on trading. It's more about investment in general. It's more about your financial goals, reviewing your financial condition, what you should be doing and stuff like that, how investing has changes. So I'm going to talk a little bit more about what I was doing 20 years ago and what is it right now, how different things are right now and back then. Okay, so that session is going to be on Friday. I believe it's going to be at the same time, 7 p.m. In Indonesian time. I believe. I don't know what time that is for everyone else. Okay, so yeah, good luck with the trades. I'll see you on Friday.